Hi, this is Jafari from It's Guys Consulting. This is continuation of accounting for education institutions such as schools and colleges, and this is part number 9 of our lessons. So we have already done part 1 and part 8. Part 1 to part 8. So this is part 9 of the lesson. Now that we have students in this accounting system, when you click on these customers, you will see we have students here, and these are their opening balances. And then we have also a fees structure. We do have a fee structure in this system. Let's take a look. When you click on settings, and then we click on non-inventory items, we will see our fee structure. So this is our fee structure. This is our fees structure. Now, let's now issue invoices to these students. Let's issue invoices to these students. How do we issue invoices to these students? It's super easy. In order to issue invoices to these students, you simply come to the sales invoices here. This is a tab. So you click on the sales invoices tab. Once you click on it, you say you want to create a new invoice, and then you go ahead and pick the date. Let's assume that this invoice is issued on 1st of January this year. So I'm going to click 1st of January this year. Due date. When is the due date? Due date means by when this invoice should be paid. So let's say by the same month, let's say by 7th of January, everyone should pay his or her invoice. Then invoice number, you can just tick the checkbox. This is invoice for whom? This is invoice for, let's say, Joseph. This is from 1. So he is a new student. So this is first installment invoice. This is first installment invoice. Then what are we invoicing? Then we will start with entrance fees, and then what else? Now, according to our fee structure, when we go back to our fee structure, it is telling us our first term entrance fees. Now, once you pick entrance fees, you have 200. Why do you have everything filled out? It's because when we were registering this non-inventory item, we indicated that entrance fee is that amount. What else according to fee structure? Entrance fees, and then, but let's start with the school fees, the way they have started. So let's start with tuition fee. First installment. No, but that one is for boarding. That one is for boarding. I have to pick tuition fees, first installment for the scholars, that amount, and then entrance fees. What else do you need to pick? We have entrance fees, then uniform, we have library. So I go ahead and pick, you can simply add line, uniforms, and then we're gonna have, but is that the amount for uniform? Yes, it's 200. Library, and then caution money, library, and then we have caution money. Do you see how easy it is? When you pick, every figure is just appearing automatically because we took so long to set this fee structure. This is why you are seeing it becomes easy now when we issue these invoices. Then what else do we have? We have medical and pocket money, but no, For the scholars, they don't have medical and pocket money, so we're not going to put anything because this is invoice for the scholars. So how much is the total? 1,380,000. So we have 1,300,000 but this is 1,382,000. I think that's a mistake because we don't have any number 2 here. So it should be 1,380,000. So we are done. You go ahead and create it. So that's the invoice. So we have 1,380,000. We can either take this to PDF or we can print this invoice. For example, if you take it to PDF, you just click on this PDF button here, then you will have your PDF downloaded here, of which you can send it to email or whatever. So this is it. You can send it to a parent and you have all the wordings you need. Okay? Or if your computer is connected to printer, you can hit this button here and then you can print it out. Simple like that. So when you hit print, this will be printed. We go back to summary. Then you can see we have this amount here as an account receivable, and when we click on it, it will display the names. Now you can clearly see for Mr. Joe, we have this amount here. Thank you very much for watching the tutorial.